Clay, welcome.
Awesome.
Hey, thanks, Ken. Hey, thanks, Neil.
Good. I know everybody's very interested in chatting with you. So I for the people that didn't get an opportunity to hear you live at Limitless, which by the way, thank you for coming to that.
That's great.
Why don't you just chat about where you think things are, how you're tapped into these capital markets, the interest rates, and kind of what's going on with specifically with the commercial real estate market. I like this question from Craig. Like as an operator, you guys make a loan. We're getting tagged with rising property tax, and Craig's was specifically about insurance. There are insurance companies that are withdrawing, out of the U.S. This happened before, by the way, mostly on the residential. I've seen it happen before. And usually when there's not as many, oftentimes we see the prices of the insurance go up. And so what are you guys doing? This is something that's not talked about a lot, but with rising expenses on stuff that you underwrote a year ago, 2 years ago, 3 years ago, because we're experiencing a 30% increase in our insurance rates. And so we budgeted for that, but we didn't budget for 30%.
Yeah. I mean, that is the sneaker killer right now is insurance.
Yeah, it is.
You're lucky that you're just because your portfolio or, the way you devised your portfolio, you're not as impacted as many folks who are coastal. I mean, frankly, with the worst real estate portfolio today, in some ways, it's great. It's still great real estate, but the cost to insure has gone up so dramatically in California, in Florida. Windstorm is the number one just bone crusher. I mean, we were doing deals in Florida. Insurance has always been higher there just because there's a lot of hurricanes there and there's been a lot of losses there. But $700 a unit. I mean, Ken's probably not. I don't know if you maybe not.
It's over two now. 2,000 now, right?
2,200, 2,400. Big. I mean, and that's could be $1 million. I mean, that could be your tax bill. I mean, that could that be a couple $1,000,000 just in insurance that you were expecting to pay. A quarter of that. So I don't think anyone's expecting that anymore. So the price is now hopefully being built into the cap rates, or at least to the deals that trade or having to trade with that market kind of insurance number in there. But yeah, insurance is a major problem, particularly for windstorm. And there are and then, obviously it's been well publicized what's happened in California with just carriers just exiting.
Yep. But and what happens, just to wrap that whole question up that Craig had, is if my insurance bill costs me an extra $300,000 or $400,000 in 1 year, then for sure the property has declined in value.
Absolutely.
At today's cap rate, everything being equal, right? Now that can all change, of course, but if you get a big hit like that and the expense side, it's a temporary drop in value if you're trying to exit at the same time.
Right.
If you're not, it doesn't matter because you can make it up in other ways, perhaps. But you can even, like what we did is we put $1 million up in a almost like in a first position, self-insurance almost. And then we were able to keep our premiums a little bit lower, but we had to put $1 million up. That's what we did. It's almost like self-insurance on your own insurance, right?
Yeah. The captive insurance program is not something that people really talked about at all.
Right.
We a couple clients that do it, but it's that same idea. It's like you're building your own, you are your own insurer. You have someone basically fronting the paper so that they're actually backing the policy, but
right,
they're relying on the cash you put up.
It's a good way to go if you're not in Florida or California,
Yeah.
We don't get a lot of wind in Arizona.
I mean, taxes and insurance has turned out to be a pretty great thing about Arizona.
For sure. Yeah. It's definitely a strategy if you guys are investing or investors that you should be looking at, because syndicators and owners and sponsors are getting tagged along the coasts.
Oh yeah. No,
No,
it's
oh, sorry about that. Joey has a question. He's looking to create a tiny home short-term rental community, and he's curious about doing construction on the site rather, basically. So he's concerned about how interest rates would affect him doing construction.
Oh yeah. What are they up in the 9s now right now?
yeah. I mean, there's basically no construction money out there, even for the largest private sponsors in the country. That's really less than 300 spread. I mean, there's not really any two-handle spreads out there, so it's 300 plus, and it's probably more like 400 or even 500 for that type of business plan, if you were going to finance it. And so again, with the index at 5 and your spread at 5, you're 10%. That's a 10% rate. And so I think if the deal still works at a 10% rate, then you've got a home run. And I would say you press forward.
Do you think it would be do you think he would have trouble financing it because they're not wanting to finance construction right now, or not really?
Yeah, it's absolutely going to be a really challenge. I mean, it's as hard of a time to go out for new construction as I've seen in my career. It's just not capital.
Let's don't forget also your loan to value's down. So
Yeah.
the one, they're not going to lend you as much, and 2, rates they're pushing at 10.